George, Linda, appreciate your time to come into the office today and talk a little bit more about the options for being upside down in value. And I wrote down some very important questions here for us to go over. Is it all right to go ahead and get started?
Yeah, sure. Go ahead.
Okay, great.
We got a lot of questions of our own.
Good. We're going to address all of them. So the first question I have is, do you see yourself staying in the property more than 15 or 20 years?
No, not at all.
Mm-hmm.
No, but we need to do something about it.
It's not a long-term project for you.
No, we've been here for a while already.
Okay. How important would you say is it to stay in the property?
Well, it's kind of important, but we've had some issues coming up with my mom lately, so we're not really sure what to do.
She's in Florida, and every time she has a episode, Linda has to go down there and for about a month. And
she incurred a lot of emotional, financial, and personal stress just dealing with all that.
Absolutely.
Yeah, George told me a lot about that on the phone, Linda. So at this time, we talked about the short sale option a little bit and what that would mean to go ahead and get away to Florida and not have to worry about this property anymore. Should we go ahead and get that short sale process started now?
Well, we don't know enough about it right now.
Okay.
So,
we had some questions.
Right, definitely. Well, let's go over them, and we're going to look at some options. And after we take a closer look at the reality of your options, one of three things are going to happen. You guys will decide to consider keeping the property and holding on to that long term, and specifically what that would mean in regards to the value and holding on to the property. Taking a look at loan modification and see if that was a viable option to make it more affordable to keep the property. And then considering short sale so that you could go ahead and move on to Florida without having to worry about this property.
So those are basically our three choices?
Right.
Okay.
And some people decide to let it go, but obviously, like bankruptcy, that's a last case resort. That's not something you really want to. You don't want to.
Yeah,
I don't like the words bankruptcy.
Let's take a look at your safer options.
Okay.
And any of those choices are fine with me. So we're gonna take a look at that, and then you guys could decide for yourself what's best for you. Okay.
Okay.
All right. Now, typically for a bank to consider a loan modification or short sale or anything with your being upside down in value, they're looking for a financial or a personal hardship. You mentioned your mom in Florida. Tell me a little bit more about that specifically and how that's affected you guys.
Well, one, we're both retired and we're on fixed income, so we don't have an opportunity to make more money. And with elderly parent in Florida, we're actually helping her out with her medical bills. Her insurance isn't all that great.
Right.
Then I'm gone and got airplane bills and
and I've got the maintenance of this house, and we're helping Mom with her house down in Florida. We're one medical incident for ourselves away from not being able to pay anybody.
Right. So it's been pretty traumatic then on you. I can't imagine it's.
And he's been taking some money out of our savings account, for heaven's sakes. We don't want to keep doing that.
Right, and on a fixed income, that's not good. I mean, that can't be going towards a good direction. So this property was your primary residence, though, correct?
Yep.
Okay, and it was just the one loan George said with Bank of America. Was that right?
That's right. We never took out another loan or did anything.
Okay, so no home equity line of credit where you took money out later on down the road.
No.
Unless Linda didn't tell me about it.
Okay.
No. We always talk about that.
All right, good. We need to all be on the same page for sure. And George mentioned that you owed approximately $300,000 on the property. Is that right?
Is that about right, George?
Yeah, it was
Close enough?
$298 and change, so rounded up to 3, I guess.
Now, George mentioned also the last time we talked, it was you guys were considering not paying. Are you still current with the mortgage now?
We are as of our last payment, yeah.
Okay.
We still got good credit.
Right.
And
that's important to us.
Yeah, well, that's good. And we'll talk about the advantages of that with your options as well for credit, securing your credit. Now, the current on the HOAs, the Homeowners Association, is that something you're still current on as well?
Yeah. Oh, yeah.
Okay. And even if, for some reason, if you end up deciding to be behind on payments, if you end up going the short sale route, that Homeowners Association is something you want to keep paying. That's not something you want to let go. They can be very, very difficult with dealing with them if you stop paying.
Well, it's only like $45 or $50 a month. So
okay, perfect.
We'll keep that up.
Now, George, you said that Linda talked about loan modification and calling the bank. Did you pay somebody to do that, or are you doing that on your own? Or tell me a little bit about that.
I just got a notice in the mail, and I called whatever that 800 number was and asked them, and they weren't very helpful and very confusing.
Okay.
I couldn't even understand what she would tell me they talked about. I don't know.
So you hadn't paid anybody to do anything for you in regards to loan modification?
No.
Okay. And you just didn't really get that far in regards to whatever it is you did discuss
They
with them?
really didn't answer my questions.
Not uncommon. I mean, that's pretty much what happens frequently to a lot of people who call the banks and try to do something like that.
My friend Ray from work, he and his wife went through it, and that was 2 years ago. They still haven't got anything
Wow,
done. 2
years.
Yeah.
So we're going to take a look at that option and what that means specifically for you too. Okay.
Okay.
Now, bankruptcy. You're not in the bankruptcy process currently. Is that right?
No.
We don't want to do that.
Okay, good. So we're going to take a look at 3 different options, like I mentioned, that many people are considering when they're upside down. And the first many people think about is holding on to the property. And let's take a quick look at the value and what that means. And then we could see currently how that affects you guys. Is that okay to look at the value now?
Sure.
Okay, great.
Yeah, I'm curious what's happening.
Right.
How bad is it?
So let's take a look here. For the property you have listed here on the Clark County's Recorder's Office, had you at about 1,637 square feet. Does that sound right?
Yep,
That's the
it
model
does.
we bought. Yes.
And the lot square footage looks almost 6,100 square feet. It looks about that size.
It's a pretty good size.
Right. And built in 2001. Would you
Yep.
say that's accurate?
We
Okay.
bought it in 2004.
Now, I took a quick look around the computer and saw the property when it was previously listed that it was 3 bedrooms. Is that still correct? It's 3 bedrooms?
Yeah, sure.
Okay. So this is the comparative market analysis, and this basically gives us idea of value based on what's currently sold. Okay.
Okay.
We've had 6 properties sell in the last 30 days.
In our neighborhood?
This is all within the same zip code, so
Oh,
within a
okay.
couple of miles of you.
Okay.
Yeah, but all close to size. The median size of all of these 6 homes was what, Linda?
1,630.
Yeah, just under what you guys are, right?
Yeah, it's almost our
Right,
model match.
right. And what was the median sale price, George?
84,000.
Yeah, right. Now look here.
That means there's some above that.
There's some above. Let's take a look at that. The highest sale point was what, Linda?
$96,000.
96,000 was the highest,
We
right?
owe 300,000.
Right. And what was the lowest?
65,000.
Yeah. Now that's your
Is that
your
a bank owned or something?
typically the properties that are selling at below, that far below the median price, properties that need a lot of work, they may or may not be bank owned, because bank owned properties are fixing up their properties to sell them too, and you would call, some people would say that's the giveaway price as far as the home being sold.
Those are terrible numbers.
Right. Well, let's take a little bit closer look at what that really means. Okay. Now, if we just ballparked your value based on the recent solds at 85,000, does that make sense?
Yeah. it
Okay.
does.
That's all?
And you said that the property was you owed 300,000, right? Your deficiency amount would be what?
$215,000.
$215,000. That's right.
The bank actually expects us to pay all that.
Right. As of right now, they do. And if we were, George, to reasonably start appreciating today, which we know is not happening, it's pretty close, that 4% a year would be a good year for appreciation, right? Would we agree on that? That 4% appreciation a year?
That'd be great for Las
Yeah,
Vegas.
right. I mean, we're not going to see those high appreciation jumps of 20 and 25% that we saw back in 2003 and 4.
Not when we bought.
Right. 4% is fair. That's something that typically and could easily happen and would be reasonable appreciation.
Is that normal?
Right? Yeah, normal.
Okay, so
Right.
that's normal. Okay.
So now what we've done here, this is a short sale calculator, I like to call it, okay, to figure out how long it would take you to break even. So let's look all the way down at the bottom here. The break even point to get back to 300,000 would be
pretty much our age.
Right.
In
Yeah.
our 60s.
right.
If
Ow.
Right.
if I
65
bought it
years.
if I bought it when I was born.
Right. Yeah. Then we could start then.
crazy.
Yeah.
That's terrible.
That's a lot of vitamins to hold
That's-
on that long, right, George? Yeah.
She takes good care of me. I don't know about 65 more years.
So if we held on to the property just to get enough equity to sell it, let's just say 10% for taxes and fees, how many years would it be then?
72 years, and that's not going to work.
Right, 72 years. Right? So holding on to your property for a long period of time is not going to make the problem go away. The elephant in the room is this amount right here, $215,000. And that's the black cloud that's going to hold over you.
What do we do?
Yeah. Well, you talked about loan modification. I want to address that because some people want to make sure that may or may not be a viable option.
Okay.
So let's take a look at how that affects you if you were to consider that route, because I know we talked about it, and we can look at what that would mean. So loan modification, and what it is basically the bank adjusting the rate of your loan. You have like a 6% interest rate, George mentioned.
6.25%.
Right.
Yeah.
So the bank on a loan modification adjusts the interest rate or the term of the loan, how long it is. Okay, so they can go from 30 to 40 years or adjust the interest rate and make it a little bit more affordable. Okay.
Okay.
Now, what's the problem with that?
Well, how much are they going to lower the
That's
loan
the,
amount?
that's the problem. That's the problem. On a loan modification, you're adjusting interest rate or the length of the loan, not the loan amount itself.
That's like a Band-Aid.
Now, yeah. Well, there are some circumstances that, people have heard of getting a principal reduction, which is different than a loan modification. But, that's like the pot of gold at the end of the rainbow. Everybody wants one, but nobody can find one, right? And, that could happen, but it's very, very, very unlikely.
I hear there's a lot of paperwork and all that stuff, too.
There is. So a loan modification is going to address the short-term issue of making the property a little bit more affordable for your financial circumstances, right? But it's not going to get rid of this cloud that'll follow you to Florida, even if you were to get an interest rate, the $215,000 you're upside down.
Well, we can't keep making this payment and take care of Mom.
Right.
It's just not.
So loan
That's
modification
very
doesn't
true.
sound like a financial advantage, correct?
No, because the bank not going to work with us very much.
Right. The best case scenario is not a great scenario at all. So the third option let's take a look at is short sale.
Okay.
And there's several reasons why short sale ends up being the best option for a lot of people. Okay. Now for a short sale, the first benefit really is the primary homeowner being able to be released of the debt forgiveness, the amount that you're upside down. Okay. And on a short sale, someone like myself can approach the bank once we sell the home and negotiate away this $215,000. Now, specific things have to happen. I just don't take on any clients. When there's medical conditions, money conditions and that's why the first question I ask you is, what specifically has happened to put you in a financial hardship? That's what the bank's going to look at primarily to forgive you this amount, the $215,000.
Why would they do that?
Because their alternative is to go to foreclosure, and it still costs them even more to go to the foreclosure process. So short sale is a win-win-win for everybody. Okay.
And the banks will actually give you those?
They're giving those, exactly. Yeah, we get them every week. Forgiveness of debt. Now, there's one more thing that happens. The tax consequences. Yeah. No, this is a good thing. This is a good thing. The tax consequences on the amount you're upside down will also be forgiven. Now, if you owe $300 and you sell for $85, the bank, and legally that looks like you've gained, right? So they'll make that taxable. Well, there's the 2007 Debt Forgiveness Act that runs only until the end of the year. Okay, it may be extended, but as of right now, it's only until the end of the year.
Okay.
It'll release you of the tax consequences on this amount, and short sale will also have the opportunity to negotiate away that amount you're upside down as well.
So until
two major things.
The end of this year, we wouldn't owe taxes on this.
Correct.
And we wouldn't owe the money any longer?
As long as we got it in writing on the short sale negotiations that this was forgiven. And that's the key.
Is that a long shot?
Right. It's not a long shot with for the circumstances that you have right now. And that's why I said I won't just take on any client. It's important to understand where you are and to know if that's a pre-qualifier for getting a good shot to make this happen. And I feel you're a great candidate for it.
It's definitely been part of our life for at least the last 6-8 months, and we don't think it's going to change anytime soon.
Have you done this for anyone else?
Right. Yeah, definitely. Last year I did around 50 of these. The year before, another 50. So, and the year before, around 30 of them. So I've done over 100 short sales in my career, and they haven't been around too long. So I'm a certified short sale professional as well as a certified foreclosure alternative consultant. And just in a nutshell, what that means for you guys is making sure you have a professional who knows how to navigate the restless waters of this whole circumstance, because $215,000, that's a big problem.
So if you're the right agent for us and we list our home with you as a short sale, you just take care of everything for us?
Right. Well, when we get started, let me address first, when I get started first, I'll be able to start selling the home, sell the home like you would normally in any other circumstance, and then get started with the negotiation process with the bank after we've sold the home and we've come into an agreement with the buyer.
Okay.
Okay, and at that point, then I would start working with the bank to get it started. So let's backtrack real quick. I know you have a question, George, but let's backtrack real quick. So getting the short sale process started and giving yourself the best protection for getting rid of that $215,000, not having to worry about the tax consequences. Does this make sense that short sale is the best decision for you guys?
Is this some sort of a trick, or? I mean,
clearly, right?
George is always questioning everything.
Yeah. So this makes sense,
legit.
right? Yeah, right.
Is it?
Right. Absolutely. Right. So the 2007 Debt Forgiveness Act, and the email I sent over to Linda's address on the common questions for people who are upside down in value.
Yeah, remember that? It had all those questions and answers to it.
And there's links there to talk a little bit more about the short sale programs that are available. Now, I looked you guys up based on your address, and believe it, I'm not sure if you know this property is a Fannie Mae based loan. Were you aware of that?
No, I just make my mortgage payments every month.
We pay Bank of America.
Right.
Who's Fannie Mae?
Right. So Fannie Mae is basically it's a government entity that secures and holds, guarantees mortgages. And for Fannie Mae, if you're going to get the short sale process started, you're going to need to be behind 60 days in payments, okay?
They're going to make us stop paying.
Right, exactly. Now, I can't tell you to stop paying your mortgage. Obviously, as a realtor, I have no authority or legal say-so to do that. But with Fannie Mae, one of their guidelines is to be behind in payments.
So I had to have good credit to get my loan.
Right.
And now I have to have bad credit for them to even do a short sale.
Let's talk about that, okay? Because for credit, I mentioned that there were some advantages, and I mentioned the two biggest advantages for short sale. But the third advantage is credit damage and limiting that. Okay. Now, with a foreclosure, people who let their property go to foreclosure or end up in bankruptcy, these are severe conditions for credit scenarios.
Okay.
A short sale is going to limit your credit, limit the damage to your credit in as little as a year to 18 months. Okay, people are buying after short sale in as little as a year to 18 months. So,
Ron and Susan, that's what Ron told me. He said they just bought a house last week, and they went through a short sale a couple of years ago.
That's not bad.
No, I thought that's amazing.
Yeah. We don't want to rent the rest of our life, but we don't know what's going to happen in Florida anyway.
Right.
Probably end up living at Mom's house, which is.
So let's talk a little bit about Fannie Mae. Because you're a Fannie Mae based loan, you are going to be eligible for the HAFA program. Have you heard about the HAFA program?
I've heard of it. I don't have any idea what it is.
half of what you owe on the property is at least that. Right. So the HAFA program is a government program that allows, if you're approved, for automatic forgiveness of debt. So you wouldn't have to worry about that. It automatically happens.
That's guaranteed.
Guaranteed if you're approved. Okay, and I'll make sure that we apply and we get in line for that program. But the second major thing is the move out incentive, where they'll provide up to $3,000 for your move out expenses. I'm not sure if you knew anybody.
I've heard of that, but we had a friend that got paid almost $15,000 to move out.
Yeah. And some banks are doing that for those large amounts that you may have heard of, there are banks specifically providing that incentive. Bank of America's, I haven't seen them specifically providing incentive that much. If there's an opportunity to do so, we'll look at it. We'll look at it. But first and foremost, I want to make sure you're protected by, let's get the short sale done, and then second, make sure all of it's in writing so that we can, have security with the forgiveness of debt, and then move on. So you guys don't have to worry about this anymore. You don't have to have the cloud hanging over your head, and we can get to Florida doing what's most important, and that's taking care of yourselves, taking care of your mom, and then dealing with your financial scenario down there.
So when we list with you, how long does all this take? Can we go to Florida if my mom gets sick, or do we have to stay in the house?
Well, it's best to have to still be here. I wouldn't say you have to stay in the property. If you need to go to Florida and take care of things.
I got to keep up the yard, or they'll find us on the
We'll get the big tickets for
Right. People who let their yards go or pools go end up with liens or clouds from homeowners associations.
What's this going to cost us?
Right. That's a great question. For the commission of the short sale itself will cost you absolutely nothing. Okay?
Come on.
Right. That's right.
So
the bank pays me out of their net proceeds. Right.
Oh, okay.
Right.
The bank pays you.
Right. Exactly. Now, here's how it works.
That's a relief.
When you sell your home, a traditional sale costs about 6 to 7% for commission to sell your home. Figure about 3% in closing costs. There's some broker fees. And that doesn't include the contribution to the buyer's closing costs. So typically, you figure...
We don't have money to give to a buyer.
Right. And that's what the other part of hiring me is going to do for you, is being able to, in writing, negotiate away those costs for the buyer's closing costs, any other fees or costs that are typical in selling your home, and negotiating those out for you in a counteroffer on the deal.
So it's almost free for us?
It's almost free.
Yeah, I heard that in Mexico a couple times.
Right.
Almost free.
Right.
It wasn't.
No, but this is important, George.
Right.
No jokes. This is big money.
I know.
Right. So there is only a one-time short sale retainer fee, a non-refundable retainer commission of $500, and this includes the short sale fee initiation and the prudential processing fee that's also included. So the only fee you'll have from me is the $500 to get you started and get going, and that'll include full listing coverage and representation, full negotiation expenses for dealing with your bank, and negotiating the full forgiveness of the $215,000.
If we
Wow,
stop
that would
making,
be great. I mean, do we have to talk to the bank, or
Right.
do you do all that
No.
for us?
I'll do that.
They're gonna. You stop making the payment, they're gonna give us. What about all the bill collectors and stuff?
Right. Well, you guys only have one loan, so it won't be as bad as some people who have two loans, and that can be
I'm just
twice
not
the
going to
headache.
answer the phone.
Yeah.
How about the
I think
answer
so.
machine?
The best thing you can do when you talk to a bank representative is let them know that you've hired a realtor. You'll have my information when you hire me.
Okay.
And let them know that you're working through the short sale process, and to contact me for any questions or concerns. Because here's one thing that'll happen. You may be talking to somebody in Texas, and I might be processing your loan for a short sale with somebody in North Carolina. So there may not be synchronization with the departments on what's exactly happening and the best information.
Let you handle it all.
Let me handle it all. Come to me with any questions and concerns. Right. Anything that in regards to communication or what needs to happen, I'm going to be the source directly tapped into what's happening with the bank.
Okay.
So are you guys ready to go ahead and get started and get this going?
Paul, we're putting a lot of faith in you. We just met you.
Yeah. It's a big.
This is all
I know.
legitimate, right?
Absolutely.
We can get out from under this 300,000.
Right. Well, we can negotiate. I can't guarantee it, but I can, based on the vast experience that I have with short sales, know that you are a great candidate to be considered for the full forgiveness, and tell you that you have a great opportunity to do so.
So, George, I think what Paul's telling us is this is our best shot. I think we just need to get started, don't you?
Right.
Let's do it.
Great.
All right.
Let's go ahead and get started. This document
Thank
here is
you.
our first document.
Okay.
Okay.